Hi, I'm Trantor. Today I'm going to talk about Ramses Exchange, which is an automated market maker on Arbitrum. I'm particularly excited about Ramses Exchange because of the incredible amount of trade volume they've started to receive over the last few months as a result of their team constantly building, innovating, and their actual increase to concentrated liquidity. Now, with that said, you can probably hear the enthusiasm in my voice, and I must say this is most important. This is not financial advice, and although I am a big fan of Ramses Exchange, nothing I say, of course, is anything apart from my opinion. I simply like to talk about stuff that I'm interested in. So anyway, without further ado, we'll talk through the Ramses Exchange. First off, this is not meant to be a full description of everything to do with the Solidly model or everything that's going on with VE33. I will say that Solidly had a very interesting start, and we'll go through that in a little while. But what's interesting about the Ramses Exchange is the level of swaps that they're currently receiving as a result of their concentrated liquidity pools versus traditional V1 pools that exist on most of the exchanges. Most notably, some recent integrations with 1inch, along with a number of other partners, have really increased that TVL and I suppose that the effectiveness of that TVL in actually generating trades. So if we have a look at what that all means, concentrated liquidity is on the right, and the traditional V1 pool that you're familiar with on the left. If you have a look at a traditional AMM, and let's say in this instance we have a highly traded pair such as USDC ARB, you'll find that the full range of trades is possible. So if ARB price dumped relative to USDC down to say 1 cent for each ARB, you would still be able to easily accommodate that in the current laydown of the traditional AMM because it covers the full price. When you get to concentrated liquidity, however, like we see on the right-hand side, people are essentially putting their LPs in specific ranges. So you might, for example, think you want to purely provide a significant LP or significant liquidity to a band only. So it might be, for example, 94 cents through to 95 cents. You think that's the logical range of trading between ARB and USDC, as an example. Now, you can make that band as tight or as wide as you want it with the knowledge that the trade volume that actually is routed through the tighter bands is significantly higher. That's because the exact price is given for that exact trade at that moment, and thus more actual trades are routed through that point. Now, if we have a look at how effective that's actually been for Ramses over the last, real month, I should say. If you look at the start, you can see there's some of the integrations that are now live for particular aggregators. So these are places that, or protocols, I should say, who are now aggregating, and those trades can go through Ramses Exchange. If you have a look on the left, you can see Ramses V2. You'll note the 24-hour volume is 2.7 million with a TVL of 2.95 million. So again, very low TVL overall of actual LPs in the position. If you look up and down and have a look at that ratio comparison to nearly everything else, you'll see that it's outperforming. And I'd like to highlight it's also outperforming against Uniswap V3, which is, I think, very interesting. Uniswap's another fantastic protocol, and I'm a huge fan of Balancer and Camelot as well, for those of you who've seen my videos before. But for this particular case with Ramses V2 model, you'll note that for a very small TVL, the 24-hour volume is absolutely enormous. So again, this is highly efficient capital being deployed, and this is the type of stuff that is generating high fees, which is that real yield, which goes across the protocol. Well, how does it work? Well, essentially, if you provide liquidity, what you're getting is the emissions. So you'll get additional RAM, that is the emission token, sent to your particular LP. The voters, that is those who have locked their RAM into VE RAM or voter squared RAM, they get their trade fees and then any bribes that are put onto that particular pair. Notably as well, the more VRAM you have connected to your position, the higher your boost can be, which is up to 2.5 times. So this, again, you'll be familiar with that for things like Balancer and Curve, etc., on how that boost might work. Now, if you look at the bottom left, hopefully that gives a good summary of what the VRAM holders earn. They'll get any bribes that are posted on specific fees. They'll get the trading fees, as well as the weekly rebates, which is all fairly standard for Solidly forks. The LP earners themselves will usually get quite a lot, generally very high APRs actually across a variety of pairs. But if you're in a concentrated liquidity pool pair, so if you've gone to CL instead of the V1, you'll also get a portion as a percentage of the actual trade volume as well. So again, that's designed to enable you as somebody who puts a deposit on CL to get more of the trade volume, not simply the emissions themselves, because of, I suppose, how complicated and how much effort it requires in particular to get that highly efficient CL. My last point there is this, essentially, this tends towards being a protocol in a well-dominated sort of space in the Solidly model. And so what I'm really highlighting there is that if you're a small holder of VRAM and you want to then boost your position, it's going to be almost impossible for you to boost it to a point that'll be getting as much in the returns as some of these whales will. So in other words, you need to sort of work out a system where as an individual, your locked VRAM is giving you the best possible returns, and then you can use those returns to get yourself the best possible options. So what can retail actually do about this? Well, to my mind, there's a few different options, and I can go through these in more details in other videos, but I'll just highlight it now. First off, if you have an LP, so you want to put something in a volatile pair, it could be with a deuce pair, it could be any number of pairs I'll show you in a little while. You can stake those on ENID, which is need RAM, which is a layer 2 aggregator. You can stake that to get their boost. Now, to be honest, staking your LP directly on Ramses, in particular in a V1 pool, it is highly unlikely that you'll be getting anywhere near as good a return as you would get on need. So I just want to put that out there. That's up to you to do, of course, not financial advice. But if you are putting your own LP down in a V1 pool, I would suggest that you should have a look at putting it in need RAM instead, which is one of the L2s, and I'll show you that shortly. You can also then, if you've got a concentrated liquidity pair, which is another type, you can stake that on ENID as well and get their boost. Or alternatively, you can go to Gamma Swap to try to get automated positions on Gamma Swap, and I'll show you that very shortly. The third option is if you are actually more either using bots or alternatively you're more actively involved, you can get your concentrated liquidity pool pair, your CLLP, and you can seek to self-manage that yourself on Ramses. So on the horizon, I'll talk about these in a different time. There are different things coming in for the Ramses Exchange, potentially the ARB grants, which I think everyone's talking about for every protocol. You've got a team that's constantly shipping new products, but notably as well, there's likely to be very soon a Clio and Mantle deployment. Now, if you want to know more about Clio, which is the new fork, friendly fork, I should say, of Ramses, which will be deployed on the Mantle network in the next little while, then we can do another video on that separately. Well, without further ado, I'll just take you through each of these different options. So the first one is, if you have a look here at the Ramses Exchange, to tell you through it. If you've got swaps here, this is where we talk about the different swap options, and we can have a look at some of the swap things that you might want to do. So if, for example, we look at ARB and we wanted to swap it across to, let's say, USDC, you can go across and we'll put in 100. And that'll give us an example now of how this would actually work. So you can look through the prices here and then how it's going to do it. It's got 100% of it will go from ARB here, the route through a concentrated liquidity pool, which has a fee tier of only 0.05%, and it'll convert that to USDC. So you get the best possible exchanges constantly updated. In this instance, across for the whole thing. You can then go across and have a look at VRAM. VRAM is your vote escrowed RAM token. And what you do with your VRAM is here on this page, you can see it has your VRAM and your rewards. And you go across to the vote page and you can have a look at different pools. If you go to V1 pools, this covers those things with basically with bribes in them or rewards and some projected fees. And you can vote on those with the amount of VRAM that you have, and then you'll get those rewards. You can also go to CL pools, concentrated liquidity pools, and then try to do the same. You can see much higher returns here and much higher trade volumes, in particular on these concentrated liquidity positions. And then finally, if you're a protocol or an individual who wants a specific pool, you can then provide vote bribes, or alternatively, you can also do LP bribes, so directly bribing those who've actually put something into the LP itself. So that's the basics of the Ramses Exchange. There's a bazaar where you can buy older VE NFTs. But again, I think this is quite an interesting thing. If you look at PaintSwap here for the different market of what's available, there is diddly squat in here. You've got a grand total of 20 RAM and then a 504 RAM, which at current prices is like $4 worth of stuff. So nobody's really selling their larger positions. Now, if you go across to ENID, this is that layer 2 I spoke about before. You can see the different options. First, you've got different pools. And what you can do here is if you stake your, let's say you staked your $USDC or something else, what you can do is push it in and it'll give you what the boost level is for this particular pool. Now, this instance, if you went to WETH NFTE as an example, the boost is 1.6. Now, as an individual, you're unlikely to be able to get better than that actual amount unless you're one of the whales who votes on it purposely themselves. So the top of this APR range for this particular pool, getting that 54%, is probably owned by one of the whales. You as an individual would get 21%, but by staking here on ENID, you're able to get the boost of 34%. Now, if we go to some of the pools that have much larger numbers, again, you can see the same is being done here for Frax wrapped ETH. So Frax ETH wrapped ETH, 4% to 10%. If you, an individual, did it, you get 4. Because you're getting the boost here, 6.6%. You can assume that the rest of those votes and that higher boost is probably going, to some of the larger whales who are voting on those positions. But you can basically have the opportunity now to scroll through and see the different types of boosts that are available. And a lot of that's to do with the amount of need RAM that actually exists in there. That they actually control now, sorry. Now, need RAM basically is a layer 2, and so what they're doing is giving you their need RAM token, which enables you to have, basically represents 1 VRAM. It's currently selling at a discount as well. There's 2 other things you can do with your need RAM. So if you have RAM itself, you can choose to convert it or swap it. You can then put it into a compounder, which will essentially compound your need RAM. It'll sell all other rewards and buy you more need RAM, with an APR currently sitting at 175%, which is lower than I expected, to be honest. And then you can go across to the staking page where you get the same returns. The advantage of the compounder, of course, is it's automatically doing it, so it becomes more of an APY rather than APR over time. But you'll also note some of the interesting things here. First off, the WETH APR on any staked RAM, so your staked need RAM, I should say, is currently sitting at 97%. Right, it's very high returns. And then you'll also notice that the rest of these returns here are in RAM or in XRAM. And at the time of this video, there's some updates being made to this XRAM number. So you can expect this to actually be higher in the future. So it's more likely around about 200% total APR. And then finally, you go across the rewards page, and that'll give you a summary and a good place to go and claim whatever you've got. So what I'm trying to highlight by showing you all this is if you want to deposit into any one of these different pools, so you go to liquidity, you want to deposit in any one of these pools, and you want to get the APR range that is not this bottom level just here, then you're probably better off going across to imminent optimizer and then depositing at your actual position, so staking it here. You'll deposit here and then move across to imminent to actually stake it, right? The next one is to do with CL. So if you're interested in the concentrated liquidity pools, you can head across to Gamma Swap or app.gamma. And once you go to have a look at this position here, you can scroll across to Ramses and you see all the different integrations they've got. Ramses Exchange provide liquidity, and you'll go across in here and have a look at their different pairs. What they'll seek to do now is if you wanted to go into a concentrated liquidity pair, you'll find something you want to do. And this, using the same boosted mechanic that NeedRAM uses, enables you to now put down a position in a concentrated liquidity, but they'll automatically balance it for you. That's what I wanted to highlight. They'll automatically balance it for you and provide you a return. So for example, wrapped ETH ARB currently sitting at a total APR of about 2.6%, up to 18% for various positions, and then all the way up to things like GNS wrapped ETH up to 108%. So these are the set and forget options for concentrated liquidity. They are not as high, not surprisingly, as some of the, if you did it yourself, if you created your own tight band, but this resets it yourself. It means you don't have to constantly buy and sell the different positions to try to balance your concentrated liquidity. So this is a real option, again, for those who want to have some, to have a CL position and to have it boosted as much as possible. And this is an option to use that using Gamma. Now, there's additional airdrops coming up, in particular for Cleo. I won't go through that now unless people are interested in Cleo later on, but that really covers off on Ramses Exchange. As I said previously, highly efficient swaps, excellent swap totals in particular for the TVL that's currently deployed. And at the moment, I think it's a fascinating protocol to keep an eye on in particular over the coming months. And if you have any questions or you'd like some more details on anything I've spoken about, then please let me know. As a reminder, nothing here is financial advice, just my take. Thanks again. See you on the next video.